Okay, welcome to this video tutorial on how to complete a basic Form 1040 for the 2021 tax year. Now, I'm going to be going through this tutorial using the Drake tax software platform. Now, obviously, if you're watching this, you don't need to have Drake tax software to follow along here, whether you're using TurboTax, Lacert, any kind of free file program, or you're just filling the forms out by hand. You're still going to be able to get a lot of utility out of this, because what I'm going to do is, as I enter the information, we're going to explain all the information, and then I'm going to always flip back to the forms so you can see how the data is being transferred to the return itself. So as you're preparing this in your own software platform, if you go back and look at the form itself to make sure that everything's lining up the way it should be, then you'll be good to go. So again, I've got Drake tax software in front of us. This is the form view. We're going to work with our taxpayer here, John Q. Doe, the fake taxpayer here living in Florida. And so also in front of us, I've got a couple of supporting documents here, right? So what most taxpayers would typically have in front of them. We've got a W-2 for John from his employer. I've also got a 1099 INT. These are interest income 1099s issued by banks, other kind of custodians. So John got one of those for the year from his savings account. And then we've also got a brokerage statement here. So this is a consolidated 1099 from the brokerage company that John has an account with. So he's got some interest, dividends, he traded some futures for the year and sold some stocks. So we'll show you how to enter that information. And then lastly here we have a IRS form 5498. This is issued to you as a taxpayer if you made contributions to an IRA during the year. So if you made contributions to your Roth, to your traditional, if you have a SEP IRA, the custodian that holds those assets for you has to issue you a 5498, and they have to send a copy to the IRS as well. Okay, so let's start with the very first thing, which most taxpayers are going to have, is the W-2. So this is a 2021 W-2. The employer's name is included with their EIN, your social security number will be on there, and they have a number of different boxes. Not all these boxes might be completed for you, right? If they don't apply, then they simply don't apply, they'll be blank, so that's okay. So what we have here with John is, he is a salaried employee at this company, and he's on a salary of $65,000 a year, and on his W-2 here, we can see that in box 12A code D, the $5,000 figure is a contribution to the 401k plan that John has at his office, right? And so if you're looking at your W-2 and you're looking at boxes 1, 3, and 5, you'll note here that box 1, 60,000 differs from 3 and 5 because when you make contributions to a 401k, they're pre-tax contributions, meaning that when you put that money in the 401k, your line 1 box wages is going to be lowered by that amount of the contribution because you're not going to be subject to federal income tax on those contributions, but you're still subject to payroll tax on them. So that's why when we look at Social Security wages subject to tax, Medicare wages subject to tax, we have the full amount of John's salary. But in box 1, we only have $60,000 because the gap there is the $5,000 401k contribution he made during the year. Okay, so let's look at the Form 1040. We'll go into the entry screen and input this W-2. So for Drake tax users, we would input it in the W-2 wages section. So obviously you can fill out the EIN, the name of your employer as it's shown on your W-2. So in this case, we're just going to key in some of the fake information here, right? It's a fake street address, right? However that's spelled, and we'll just, put in all 9s here. Fake street address. So remember, okay, so we've got 1, 3, and 5 boxes, and then 2, 4, and 6. Recall that his box 1 wages is $60,000, right? And the Social Security wages are $65,000, right? So the Social Security Medicare is $65K, so we'll update those. Most software platforms will update the amount of Social Security withholding and Medicare tax because it's just a simple 0.062 times this amount or 0.145 times this amount. But make sure that those values are right, because it is not common, but it is possible to have under or over withheld Social Security taxes or Medicare. And if that's the case, then what you can do is you can file for refund claims for the excess amounts. So the last remaining item, well, second to last, is the federal income tax. So $4,000 of federal income tax was withheld from his paycheck. So we're going to key in that $4,000 figure. And then we're also going to key in the box 12 code D amount. So code 12D, elected deferrals to a 401k or deferred arrangement plan. That's the one we want there. And then the amount that he contributed was $5,000. Okay, so that's all the information we entered there. You can check box 13, retirement plan, right? If we look at the W-2, that was marked there. And then we'll just quickly scan through all these other items and make sure there's no other information that should be entered. Lines 15 through 20, these are entered if you live in a state that required state withholding tax, right? So John here lives in Florida. Florida doesn't have a state income tax on individual wages or income, so these sections are going to be blank if you're a Florida resident or you're a resident of another state that doesn't have any income tax. Okay, so now that that information is entered, let's go ahead and look at how that got translated over to the return. So I'm going to view the forms here. This is just an Efile Diagnostics screen for me. You probably won't see this, but it's giving me a warning here because obviously this is a fake Social Security number, right? So I'm going to always see this warning sign whenever I flip to it, but you know, the return itself, the numbers are still going to be accurate based on the information that we're entering. Okay, so we go back to page 1 of Form 1040. What information did we see on the W-2 that transferred over here? Well, the first thing that we'll note here is line 1, wages. There's our $60,000 figure. Now remember, on the W-2, as we pointed out, box 1 is the amount of wages that are subject to federal income taxes, not 3 and 5, right? Because he made this elective deferral on the 401k plan, so it's only the $60,000 that you should see being reported in box 1 there. Okay, so if you see anything other than that, then maybe you know, it's pulling through lines 3 or 5. Which is not right. It should be box 1 wages are what's being reported on line 1 for wages, salaries, tips, etc. Right? Okay, so now the second element that's reported from this W-2 is the federal income tax withholding. So if you go to page 2 of the Form 1040, lines 25, code A, we can see federal income tax withheld from forms W-2. And there's our $4,000 figure. So if we go back to the W-2 really quickly, that's line 2, federal income tax withheld, $4,000. And so that's the amount that is flowing through to line 25A for John's tax return. Okay, so now you'll notice here that in this case, none of these other values really show up, right? The 401k plan, none of this information is actually reported on the tax return. And then the amount of Social Security and Medicare wages, again, they're not reported. In limited circumstances, if you have multiple jobs and earn a lot of money, there might be some extra Social Security tax or Medicare tax recapture there, but this example doesn't apply, right? So we just have a very simple 1040 W-2, and the only values that you're really seeing flow through to the return are boxes 1 and 2 on that W-2, or on the W-2 to the 1040. Okay, so that covers the W-2 entry. Now let's look at some interest income. So if you have a savings account, or if you have another type of account with a custodian or brokerage firm that pays you interest on those cash balances, you will likely get a 1099 INT. In this case, John has a savings account with his bank, so he's going to get some interest income earned during the year on that account. And so the bank sent him this 1099 INT. Now the amount of interest he was paid during the year is $16.23. Okay, so let's go back to our entry screen, and we'll go through the 1099 INT entry for the bank. So when you fill out this information, you can, depending on the software platform, it might ask for a lot of information here, but with respect to what gets reported on the return, you're really only reporting the name of the payor, so whatever the bank name is here, and then the amount of the interest income. So we have bank name, interest income is $16.23. Now, when you file your taxes, the IRS wants you to round everything to the nearest dollar. So even though it's $16.23, I'm not going to enter 23 cents. I'm just going to do $16. that's okay, right? They actually, in the form instructions, it says to round it. I see a lot of people enter the cents, and it's meaningless. You're not supposed to do it, so just round everything to the nearest dollar, right? If it was $16.80, round it up to 17, and then you should be okay. Okay, so we've got the $16 from our bank here. So now let's look at where that information is going to flow through to the tax return. Well, it's going to show up in two places. So the first one is Schedule B. So Schedule B is included with your 1040. This is where you report interest income, dividend income, whether it's U.S. or foreign. And you also include questions in Part 3 about foreign financial accounts. So for John here, the first entry on Schedule B here is the bank interest for $16. The subtotal here on line 4 is going to be then reported on page 1 of the Form 1040. Right, so if we go back to page 1 of the Form 1040, after you enter that interest into Schedule B, you should see it flow through to 2B, right? So there's that taxable interest income 2B. Now, you'll notice here we have tax-exempt interest 2A. What is that? Well, tax-exempt interest is interest income earned on municipal bonds or other types of investments that are not subject to federal income tax. So if you invest in municipal bonds and have interest, or municipal bond ETFs, you could have tax-exempt interest dividends. Those amounts you'll see here on line 2A, because they still have to be reported, but it's not going to be included in the taxable line item on 2B. Now for John, he doesn't have any complex investments like that, so he's just got the taxable interest here of $16 on line 2B. Okay, so if we quickly go back to Schedule B, I just want to run through Part 3 really quick. We'll get into some dividends because he does have those. But Part 3, foreign accounts and trusts, be very, very careful to pay close attention to this section. If you are a U.S. taxpayer and you have a financial interest in foreign bank accounts or foreign trusts, foreign corporations, foreign partnerships, there's a lot of additional disclosures that you need to include with your tax return. And FBARs, or foreign bank account reporting, is one of them. So John doesn't have any of these accounts, so he's going to answer no to all these questions. But if you are watching this and you find that you have a foreign bank account, not only should you complete this section accurately by perhaps answering yes, but you need to file FBARs or maybe Form 8938s. There's a lot of additional disclosures that you might need. So be very careful to pay close attention to this Part 3. Okay, so that covers the interest income piece. Let's go back to our supporting documents. We'll note here that there's really nothing else that's being reported, right? There's no early withdrawal penalties. There's no taxes withheld. This is U.S. source interest, so there's no foreign tax. Obviously, if you have a 1099 INT and these fields are relevant, then you should key them into your tax software to enter the information. But 99 times out of 100, when I see a 1099 INT, it looks like this. Right, there's just box 1 entry and then some information on the recipient and the payer, and then that's it. Okay, so moving on, let's go to the brokerage statement, the consolidated 1099. So the reason why we call this a consolidated 1099 is because when you have a brokerage account, you get income that could be interest, dividends, miscellaneous income, and then sales proceeds from the sale of stocks or securities. So dividends and distributions are reported on 1099 divs. Miscellaneous income is 1099 miscellaneous. The sale of securities, futures contracts, those are on 1099Bs. And then if you have any kind of interest income, you'll get a separate 1099 INT. Now, what brokerage companies do now is rather than issue a separate statement for all of these, they just throw it all on one and then provide that to you so it's easier for you to use. So in this example here, John has an account with a brokerage company. They look all of them take on a similar format to this, right? Whether it's Schwab, TD Ameritrade, Robinhood, whatever it might be. You'll get something that looks like this. So the first section we're going to focus here on is the dividends and distributions, so 1099 div. We can see here lines 1A, 1B, and 2A, we have some entries. Everything else is 0. 1A, total dividends. 1B is qualified dividends of $9. And then they have some capital gain distributions of $3. Now, 1A is the total amount of dividends that were paid to you, okay? 1B represents what portion of that amount is qualified. Okay, so in this case, John received $9 in dividends. That was the amount deposited into his account. And of that 9, he's allowed to characterize the entire amount as qualified. If you have an amount that differs here, then what that means is that you have dividend income that is non-qualified dividend income. And the reason why that's important is because qualified dividends are subject to lower tax rates than non-qualified dividends. Okay, so now let's look at the software again, and we'll enter these these details here. We have 9, 9, and 3. So if I go back to the entry screen here for 1099 div, we're going to open this up. It's cutting the name off here at the top, but we can enter just custodian. Let's see. So we have the custodian name that goes in there. Ordinary dividend income is 9, and again, of that amount is $9 in qualified, and then he had $3 in capital gain distributions. Okay, so these amounts should correspond to the 1099 div, right? The consolidated 1099. And so most software platforms will use the same numbering system, so it makes it easier to transfer the values over. Okay, so now that we've entered that, let's go ahead and look at the form and see how this made its way on to the 1040. So if we go back to Schedule B, all right, we have interest in Part 1, dividends down here in Part 2. So we've got the custodian, whatever the name might be, and there is our $9 of total ordinary dividend income. Okay, so once this section is completed, Part 2, then the value should show up again on page 1 of Form 1040. So if we're looking at page 1, Form 1040, we scroll down here a bit, we can see the entries on line 3 and 3B, right? So 3B is the total amount of dividends. That's the ordinary total amount of dividends. And then of this portion, you would enter the qualified piece in 3A. In this example, all of the dividends that John received is going to be qualified dividends. So the amounts match, but it doesn't always necessarily have to work like that, right? You could have ordinary dividend income of $9 and maybe only a portion, $4, is qualified. If that's the case, make sure that you separate the two out. But in this case, all of John's dividend income of $9 is going to be treated as qualified. So he has the entry on line 3B and then again on line 3A. Okay, so now let's look at the 1099 again here, and we'll move over to the futures contracts. So Section 1256 futures contracts. These are futures contracts that are traded in the account, and what's unique about these under Section 1256 is you mark to market the futures at the end of the year. So if you hold any open positions at year end, you effectively treat them as if they were sold, even though they really haven't closed out the position. The other unique thing about 1256 contracts is no matter what your real holding period is for the dispositions, there's always a breakout between long-term and short-term capital gains. So let's look at the software again and see how we enter these. Futures contracts are entered on Form 6781. Okay, so if we go into our income section here, we've got our futures and straddles Form 6781. So if you do have any futures or straddles, you're going to have to enter them on this kind of form. So identification of the account, they generally like to ask that you say it's from a 1099 and then name of the custodian. So again, whatever brokerage company you're using, enter that information there. And then the total gain or loss is the aggregate profit or loss on the contracts, right? So line 11 here, 3,651, which is a combination of the amounts that were actually closed out plus the unrealized profits at the end of the year. Because remember, futures contracts, we're marking to market the futures. So we have 3,651. Let's go ahead and enter that into this section here, 3,651. And if we close this out and go back to the form view, we'll see how this ended up on the 6781. Okay, so on 6781, we have our gains, losses from 1256 contracts and straddles. Identification of the count here, right? It's coming from the 1099. We have gains of 3651s. And here's where the breakout occurs, right? So futures contracts is split. 40% is short-term, 60% is long-term. So of the 3651, we've split it out to 1,460. 2,191. So that's where it initially shows up, is on this Form 6781. Then the information flows through to Schedule D, right? Because we have short and long-term capital gains. So if we look at our Schedule D here, capital gains and losses, if we scroll down, the short-term section, Part 1 here, line item 4 says short-term gains from 6252, or there's our 6781, right? So this is our futures contracts, the short-term portion, 1,460. And then a reciprocal entry is entered down here in Part 2, long-term capital gains and losses, again, coming from the 6781 for the 2,191. Okay, and what you also notice there is our capital gain distribution amount of $3. So if we go back to the 1099 here, you recall up here on line 2A, total capital gain distributions $3. That's where that value lives, right? You'll see that number reported on line 13 down here. Okay, so now Schedule D, these numbers, we're still got some work to do on Schedule D for some stock sales. But once these values are completed, again, you'll see this flow through to page 1 of the Form 1040. So page 1 of the Form 1040, we have capital gain or loss, attached Schedule D. There's our consolidated figure, $3,654. Okay, so now let's go back to the brokerage statement and keep working our way through it. So the next section here is the gains and losses on the sales of these stocks. Okay, so there's a couple of reporting pieces here. Now, if you have stock sales where you have box A checked here, so these are short or long-term sales, basis is being reported to the IRS, and you have no adjustments, then on your Schedule D, sorry, let me open it really quickly here again. On Schedule D, when you have short-term capital gains and losses, basis is reported, and you have no adjustments, you are allowed to just enter the totals here on line 1A. So notice here it says totals for short-term transactions that are reported on 1099B, basis is reported, and you have no adjustments. You can enter the totals here, and you don't have to provide any details on the 8949. Now, if you're looking at your 1099B here, and you see you have entries in B, C, E, or F, or even if you have codes A and D where basis is reported, but you're going to have adjustments for lost sales or market discount, then you can't use this top line item here. You can't use 1A and you can't use 8A to report the totals. In our case, though, again, we've got a very simple example here, and so we have box A reported, and we have no adjustments. So we're just going to go ahead and enter the totals here so we don't have to do a Form 8949. That might not apply to you, right? Take a close look at your 1099B and see what you're allowed to do. So in our example here, we have $2,482 in proceeds, $2,022 in costs. So we're going to go to our Schedule D entry here where we have totals for short term. So that proceeds amount was 2,482. So we're going to do 2,482. The cost basis was 2,022, right? Because remember, we're rounding here. So we can enter those, and we'll go ahead and check the form again. Go back to Schedule D, and there's our entry, right? So we've got the proceeds up here, cost basis, and the gain or loss on the sales of those stocks. And again, if you have box A checked and no adjustments, you can enter the totals here. If you don't, you need 8949 and then enter it on the appropriate line item, okay? Okay, so that covers the sales of the stocks. Now let's go down to the remaining of the 1099 consolidated, where we look at 1099 INT. Okay, so a lot of line items here. You notice a lot of them are zero. That's fine, right? If they don't apply to you, that'll be zero, then forget it. But you'll note here that we do have some interest, right? So line 1, interest income, $2. So we need to enter the $2 of interest from this custodian into our return. So let me go back to our Schedule D, Schedule B entries, right? So we have another 1099 INT. This will be, again, from whatever our custodian is, and it's $2, okay? So I'm going to save that, and then I'm going to view our Schedule B again. And there's our updated amounts from this custodian. So we've got our, the bank from the previous entry, $16 of interest. We've got our custodian there, $2 of interest. And there's our subtotal of 18, which flows through to page 1 of Form 1040 again, right? So there's our updated figure, $18 of interest income. Okay? Okay, so that covers it for the 1099-B. Now let's move on to the last piece, which is the entry of John's IRA contribution. Now, pay careful attention to IRAs, because traditional IRAs generally deductible unless you make too much income, and then there's other rules for whether you're covered by a retirement plan at work, whether you can deduct anything or not. And then Roth IRAs, generally, they're not deductible ever. So if you have Roth IRA contributions, you can't make deductions on your return for the contributions. But in some cases, if you make too much money, you can't have a Roth IRA at all. So in this example, we've got John here. Now remember, he is covered by a retirement plan at work. He has that 401k. But he also has a traditional IRA, which he contributed $2,000 to during the year. So let's go ahead and enter this and talk about the traditional IRA contribution and deduction a little bit more. So if I go back to our 1040 here, what I'm going to do is I'm going to enter an adjustment here, which should be, let me see where the form is. It's an 8606 form. Let's see. Trying to find where this lives. I think it might be in the adjustments section. Okay, there we are. IRA deductions, Form 8606. So here's the reason why I'm filling out a Form 8606. When you have traditional IRAs, again, you can make contributions to them, you can take a tax deduction, but if you make too much money and the traditional IRA contribution exceeds certain thresholds, then you can still put the money into the traditional IRA, but you don't get a tax deduction for it. So for John here, what we want to do is make sure that we appropriately record this to make sure that he can take the deduction. If not, then we have to phase it out. So we're going to check that he is covered by a retirement plan at work, and that's going to drive how much of a deduction he can take, if any. The total contributions he made during the year were $2,000. And so what we want to do now is we're going to look at the worksheet. So the software is going to do this for us automatically, but after I close out of this, we're going to look at the worksheet to see how much of it is actually deductible. So I'm going to jump into the form view here. Okay, so we've got his 1040 here. Let's take a look at the 8606 worksheet. So here is the IRA deduction worksheet. If you make traditional IRA contributions, you need to complete this worksheet, because you need to be sure that the money you're putting in there, you can take a deduction for. If you can't, then you can still leave the money in the traditional IRA, but you're not allowed a tax deduction for it. So the worksheet, pretty straightforward. It's 2 pages, but it's a lot of yes or no questions, and then it brings up thresholds about your income to see if it's deductible. So yes, we are covered by a retirement plan at work. Remember, on John's W-2, we could see that he had a 401k plan and he was covered by a retirement plan at work. And so what they're asking here is, they're trying to get a sense of what is his income level as a single filing taxpayer, because if it exceeds this yearly threshold, then there could be a phase out on the deduction. In this case, John's AGI, so if we look at his 1040, line 9, okay, so the total income, sorry, not his AGI, his total income, line 9, $64,141. That's the number that we need to pull into this worksheet. If his income exceeded this threshold here, $76,000, then what that means is there's going to start to be a phase out on the amount of deduction he can take. But in this case, he's covered by a retirement plan at work. His total income is under this amount, so he is going to be able to deduct the full amount, right? So as it says here, right, is the amount on line 5 less than line 2? Yes. So he follows the instructions as it asks here. Subtract the amount. He's got $11,859 remaining. Multiply by the appropriate percentage. $6,000 is the maximum amount of contribution that you could make to the traditional IRA for 2021. And so as we move our way on down here, we can see that the amount he contributed during the year, again, was $2,000. And of this amount, bottom line number, which we're most interested in, is of the amount he contributed, how much can he deduct? $2,000. Now, where you can find this worksheet, if you're preparing this by hand, go to IRS Form 8606 and look at the instructions. In the 8606, they'll have these worksheets there for you, and so you can calculate how much of your traditional IRA contribution, if any, is going to be deductible. Okay, so now after the deduction is calculated, where does that live on the return? Well, the first place it shows up is Schedule 1. So Schedule 1 covers additional income and adjustments to income. So Part 1 is the additional income items. So you can see here a lot of different various items, but none of which apply to us, right? In this fact pattern. Then Part 2 is the adjustments to income, and you'll notice here on line 20 we have an adjustment for the IRA deduction. So this is a reduction to his income of $2,000, which is attributed to that traditional IRA contribution. Now, once all of these adjustments are totaled up, we've got $2,000 at the bottom there, and that will flow through to page 1 of Form 1040. So we go back to page 1 here, scroll down a bit, you'll notice here on line 10, adjustments to income from Schedule 1, line 26, there is our $2,000 figure. So once you total up all your income, you reduce your income by the adjustments to income, you get your adjusted gross income. Now, once you have your AGI, then you look at whether you are taking the standard deduction or the itemized deduction. In John's case, he doesn't have any itemized deductions, right? Itemized deductions are reported here on Schedule A. Medical expenses, property taxes, sales taxes. If you have mortgage interest on your property, you can enter those here. If you make charitable gifts, enter those here. The total itemized deductions here for John, only $716. So obviously he wants to use the greater amount, which is going to be that traditional, not the traditional, which is just the standard deduction for the year, which for a single filing taxpayer is $12,550. The amount changes if you're head of household. It changes if you're married, filing jointly. So check your filing status up here to determine what type of standard deduction you are eligible for that 2021 tax year. Okay, so once you have your standard deduction, you reduce that from your AGI, and then you arrive at your taxable income or loss, if you have, let's say, an NOL for the year. So line 15 is your taxable income. And then you compute your tax based on the tax rate tables that you see in the Form 1040 instructions. So in this, obviously we're using software, which is very helpful because it will automatically compute this amount of tax. The tax that's being computed here is under the qualified dividend capital gain rate tables, which means that if you look at the income up here, the wages, the interest, these are all subject, the short-term capital gains, these are all subject to ordinary income rates, but the qualified dividend amounts and the long-term capital gains are subject to those lower tax rates. So you get kind of a blended rate here based on what is the tax on your ordinary income versus what's the tax on qualified dividends and long-term capital gains. Now, once you compute the tax, again, here we have the amount of federal withholding that was coming out of his paycheck, $4,000. And so based on his income, tax liability, the withholding, John does owe some money at year end because he had those capital gains, he had that investment income, and so that's what he's basically paying the tax on here. So he owes $2,539. And the software automatically computes an estimated tax penalty, which basically means you didn't make enough estimated payments during the year, you didn't have enough withholding, and so they charge a little bit of interest on the underpayment that's not paid throughout the year. Okay, so that covers the tutorial. Again, I hope this was helpful. Just a very simple example on some of the most common forms we see. Obviously, if your tax situation is different, you could have significantly more forms or reporting obligations. So really depends on what your profile looks like. But some of the items we've gone through, well, all the items we've gone through are hands down some of the most common ones I see popping up every year. So that's why I cover them in this example. Okay, so that covers it. Thank you so much for watching, and I look forward to seeing you again on the next video. Thank you.